Scene 1: The Electric Surge. Hey there Tesla fans and EV enthusiasts. Buckle up because we're about to take a wild ride through Tesla's electrifying Q2 2024 performance. It's time to see how Elon Musk's brainchild is faring in the ever-evolving world of electric vehicles. Let's start with the headline numbers that have Wall Street buzzing. Tesla delivered a whopping 444,000 vehicles in Q2 2024. Now that might be a slight dip of 5% compared to last year, but hold your horses. It's still ahead of what analysts expected. And get this, it's a new quarterly record for Tesla. Talk about defying gravity. But wait, there's more. Tesla's not just about cars anymore. Their energy storage business is on fire. Figuratively, of course. They deployed a mind-blowing 9.4 GWh of energy storage product in Q2. That's more than double their previous quarterly record. Looks like Tesla's batteries are charging up more than just their cars. Now let's put these numbers in perspective. While Tesla's delivering 444,000 vehicles might sound impressive, Chinese EV maker BYD is hot on their heels with 426,039 electric vehicles delivered in the same quarter. The competition is heating up, folks. Scene 2: Show me the money. Alright, let's talk cash. Tesla raked in record quarterly revenues in Q2 2024. Ka-ching! But here's where it gets interesting. Despite all the challenges, the whole difficult operating environment thing, Tesla managed to pull off a GAAP operating income of $1.6 billion. Now before you pop the campaign, there's a catch. They had to swallow a bitter pill of $622 million in restructuring charges, ouch. But hey, when life gives you lemons, make electric lemonade, right? Here's the kicker: Tesla's GAAP net income for Q2 was a cool $1.5 billion. Not too shabby, eh? And if we're talking non-GAAP, because who doesn't love a little financial gymnastics, that number jumps to $1.8 billion. But let's not forget about free cash flow. Tesla generated a positive free cash flow of $1.3 billion in Q2. That's like finding loose change in your couch cushions, but on a massive scale. Now, how does this stack up against the competition? Well, while Tesla's raking in billions, companies like NIO and SPANG are still working on turning a profit. NIO reported a net loss of $547.8 million in Q2 2024. While SPANG's net loss was around $384 million. Tesla's profitability in this competitive landscape is nothing short of impressive. Scene 3: The price is right. Now let's talk about something that's been on everyone's mind: Tesla's pricing strategy in Q2. Tesla got creative with their pricing, offering some pretty sweet financing options to offset those pesky high interest rates. But here's where it gets interesting. These financing programs had an impact on revenue per unit. In the quarter, it's like Tesla's playing a high-stakes game of the price is right, trying to find that sweet spot between affordability and profitability, and guess what? These impacts are sticking around for Q3 too. Tesla's already launched similar programs, making this the best time to buy a Tesla. So if you've been eyeing that shiny Model 3, now might be the time to make your move. Speaking of Model 3, let's compare prices. Tesla's Model 3 starts at around $40,240 in the US. Meanwhile, the Chevrolet Bolt EV, one of its main competitors, starts at about $26,500. On the higher end, Tesla's Model S goes for about $88,490, while the Porsche Taycan, a luxury EV competitor, starts at around $86,700. Tesla's positioning itself as a premium brand, but with options for various budgets. Scene 4: The margin call. Alright, let's dive into the nitty-gritty of margins. Despite all the price cuts and financing shenanigans, Tesla managed to keep its automotive margins flat. Sequentially, that's like walking a tightrope while juggling flaming torches. Impressive but nerve-wracking. But here's where it gets really interesting. Tesla's cost per vehicle actually declines sequentially when you exclude the impact of Cybertruck. It's like they're playing for chess with their production costs. Now let's put this in perspective. While Tesla doesn't disclose exact margin figures, industry estimates put their automotive gross margin around 18 to 20 in recent quarters. Compare this to traditional automakers like Ford or GM, who typically see margins in the 5 to 10 range for their combustion engine vehicles. Even in the EV space, Tesla's margins are enviable. NIO, for instance, reported a vehicle margin of 7.7% in Q2 2024. Scene 5: The Energy Revolution. Now let's shine a light on Tesla's often overlooked energy business, folks. This is where things get really exciting. Tesla's energy storage deployments hit an all-time high in Q2, leading to record profits for the energy business. We're talking about 9.4 GWh of energy storage products deployed in a single quarter. To put that in perspective, that's enough to power about 315,000 average American homes for a day. And it's not just about quantity, it's quality too. Tesla's energy business saw record revenues and profits. It's like they've found the pot of gold at the end of the renewable rainbow. Now let's compare this to some competitors. Enphase Energy, a major player in the solar energy space, shipped about 4.1 million microinverters, equivalent to approximately 1.5 GWh in Q2 2024. SunPower, another solar company, installed systems capable of generating about 76 megawatts in the same period. Tesla's 9.4 GWh deployment dwarfs these figures, showcasing their dominance in the energy storage market. Scene 6: The AI Revolution. Alright, buckle up because we're about to enter the realm of AI and robotics. Tesla isn't just about cars and batteries anymore. They're diving headfirst into the world of artificial intelligence. In Q2, Tesla made significant progress with their full self-driving SSCD technology. They're rolling out version 12.5, which is a big deal in the autonomous driving world. It's like teaching your car to drive better than your teenager. But here's where it gets really exciting. Tesla is nearing completion of the south expansion of Giga, Texas, which will house its largest training cluster to date. We're talking about some serious computing power here, folks. And let's not forget about the Optimus robot. Elon Musk himself tweeted that he expects to have some of these robots operational in Tesla factories next year, with more available for other companies by 2026. It's like we're living in a sci-fi movie. Now let's compare this to some competitors. Waymo, Google's self-driving car project, has been testing fully autonomous vehicles in Phoenix and San Francisco. GM's Cruise is also testing robotaxis in San Francisco. But Tesla's approach of using vision-based AI and deploying it to their entire fleet gives them a massive data advantage. As for humanoid robots, while companies like Boston Dynamics have impressive prototypes, Tesla's goal of mass-producing Optimus for practical applications is uniquely ambitious. Scene 7: The Global Domination. Now let's zoom out and look at Tesla's global footprint. Tesla's performance outside of China, particularly in the US and Europe, is crucial. It's like they're playing a real-life game of Risk, but with electric cars. Tesla's facing some tough competition in China, the world's largest EV market. Local automakers are giving them a run for their money, but Tesla's not backing down. They're doubling down on their engagement with foreign markets. Let's break it down by region. In the US, Tesla delivered about 216,000 vehicles in Q2 2024. In Europe, they delivered around 125,000. And in China, despite the tough competition, they still managed to deliver about 85,000 vehicles. Now let's compare this to some competitors in China. BYD delivered a whopping 426,039 electric vehicles in Q2 2024. NIO delivered 57,373 vehicles, while Speng delivered 52,028. Tesla's 85,000 deliveries in China might seem small in comparison, but remember, this is just one market for Tesla. Their global reach is what sets them apart. Scene 8: The future is now. Alright, let's fire up the flux capacitor and take a peek into Tesla's future. Elon Musk and his team have some pretty wild plans up their sleeves. First up, the Roadster, a sports car that can travel from San Francisco to Los Angeles and back on a single charge. They're even planning some upgrades before it hits production next year. It's like they're building a vehicle straight out of Blade Runner. But that's not all. Tesla's also working on a more affordable model, set to hit the streets in the first half of next year. It's like they're trying to make EVs as common as smartphones. Now, let's compare these future plans to some competitors. Ford is planning to launch its electric F-150 Lightning, directly competing with the Cybertruck. GM is working on the Chevrolet Silverado EV in the affordable EV space. Volkswagen is developing the ID.2, aimed at the mass market. But Tesla's combination of cutting-edge technology, brand appeal, and established charging infrastructure gives them a unique advantage in these upcoming battles. C9, the numbers game. Alright, number crunchers, this one's for you. Let's dive into some of the nitty-gritty financial details that make Tesla tick. Tesla ended Q2 with over $30 billion in cash and investments. That's a lot of zeros. It's like they've got their own Fort Knox, but filled with electric dreams instead of gold. Now let's talk about capital expenditure. Tesla expects their capex to be over $10 billion. For the year, that's a big number. But remember, you've got to spend money to make money. And here's an interesting tidbit. Tesla had a record quarter for regulatory credits. Revenue, it's like they're making money by being green. Now let's put these numbers in perspective. Tesla's $30 billion cash reserve, as impressive compared to many automakers. For instance, Ford reported about $29 billion in cash and marketable securities at the end of Q2 2024, while GM had about $22 billion. Tesla's strong cash position gives them significant flexibility for future investments and weathering potential economic storms. As for capex, Tesla's $10 billion investment is substantial. In comparison, Ford plans to spend about $8 billion on capex in 2024, while GM expects to invest $13 billion. Tesla's willingness to heavily invest in future growth and technology development is a key part of their strategy to stay ahead in the EV race. Scene 10, the road ahead. As we wrap up our Tesla Q2 2024 journey, let's take a moment to look at the road ahead. Despite the challenges, Tesla remains optimistic about the future of EVs. Tesla believes that pure EVs are the optimal vehicle, designed and will ultimately win over consumers. It's like they're betting on electricity, the way early adopters bet on the internet. The company is focusing on company-wide cost reduction, including reducing COGS per vehicle, growing their traditional hardware business, and accelerating development of AI-enabled products and services. It's like they're playing 3D chess, while everyone else is still figuring out checkers. And let's not forget about the potential robotaxi business. While the timing depends on technological advancements and regulatory approval, Tesla is working vigorously on this opportunity. It's like they're trying to build the future of transportation, one self-driving car at a time. Now let's compare this outlook to some competitors. Traditional automakers like Ford and GM are investing heavily in EVs, but they're also hedging their bets by continuing to produce ICE vehicles. Pure EV makers like Rivian and Lucid are focusing on premium segments, but Tesla's combination of mass market appeal, technological innovation, and diversification into energy and AI sets them apart in the industry. As we close out this video, remember that the world of EVs is constantly evolving. Tesla's Q2 2024 performance shows they're not just along for the ride. They're in the driver's seat, steering us towards an electric future. So what do you think about Tesla's Q2 performance in future outlook? Are they on electric? Or do you see bumps in the road ahead? Let us know in the comments below. And if you enjoyed this deep dive into Tesla's world, don't forget to like, subscribe, and hit that notification bell. We'll be back with more electrifying content soon. Until then, keep your batteries charged and your eyes on the road ahead.